I think as long as the cost of money stays relatively stable, so we don't have a big spike in interest rates, the industry can manage that. But I would say that, Canada is well priced for the risk that we present globally. There was a time a little while ago where people were feeling it was perhaps overheated or overpriced, but I think in general, given the risk, given the stability, geopolitical stability we have in this country, the returns that we're getting out of our real estate, especially the actively managed portions, are delivering reasonable returns. So we're not at the top of the cycle. We're sort of in a holding pattern, sort of halfway up the clock, I would say.
Not all markets are created alike. Markets are not homogeneous. They're in fact heterogeneous. And I think it will vary. You look at Vancouver, where there is concern about the acute rise in value for residential, whether for sale or for rent. But at the other hand, you look at the very positive underlying dynamics, the in-migration and job creation there. Same thing with Toronto. It is an economy that is fueled by job creation and in-migration. And in each of those cases, we are, I believe, feeling like we're kind of at a point in the cycle where you might argue that you're kind of priced to perfection. So therefore, you really have to calibrate your sense of risk and then the pricing of that risk accordingly in each of those markets. In Alberta, that's had its own issues over the past year. But given our exposure there and the interface that we have with clients and borrowers and investors, I think we're beginning to see somewhat of a settling in the marketplace with some positives emerging as a result of good news on oil prices. And so therefore, you might argue that values over the course of this year and into next year may experience some improvement.
We're asked that question quite a bit. I think our view would be it's certainly late in the cycle, but that doesn't necessarily mean it's near the end of the cycle. So we don't relate to the 9 innings of a baseball game and we're in the 8th or 9th inning. The way that markets operate in our view, if you were to relate it to innings, you can move your way through innings and then actually move backward a couple of innings. Or said another way, you can go into overtime, you can go into extra innings. So it's late-ish in the cycle. Doesn't mean it's over. And again, in that same spirit of a trifurcated market, to generalize in Canada as a whole is a little difficult to do. So some markets continue to have growth. Others, I would say, are definitely at the end of the cycle.
Yeah, the cycle question is always an interesting one. So what we're really wrestling with right now is, are we further into a cycle or are we just into a new reality? Is this sort of a new normal? And again, when you look at relative valuations, when you look at real estate versus other asset classes, it would make you think that we're well into a cycle, but not in a 9th inning or in a 3rd period, depending on the analogy you want to use. Again, we feel very comfortable with where we are right now. So if I had to pick something and I was going to use that baseball vernacular, I'd probably say it's like a 7th inning, but there's a lot of potential for overtime, given the flow of capital and the safe fundamentals that we all enjoy in Canada.